When I was buying Taiwan Semiconductor, it was undervalued. I released a short talking about how it's cheap, how it's undervalued. Now it's already run up, already made 17% on my money, and I still think it's at a kind of fair value at this point, only selling at a 21 PE. The expected growth for AI right now is insane. We have Meta spending crazy amounts of money on AI. We have Amazon making their own chips. We have a lot of different companies, even Google making their own chips. So if you want to make these advanced chips, you need TSM as they're leading in the advanced manufacturing of these chips. They own like 90 to 80% of that market with the 5 and 3 nanometer chips. This whole chip AI race is just getting started. So I can honestly see this company grow at a conservative, at least a 14%. Like that's conservative in my view. I feel like it can probably do more. We see TSM management overall being really bullish on the market and kind of where they're seeing this industry going. They're seeing negative demand for phones, which is actually hurting their bottom line. But guys, what happens if that turns around? That means my conservative 14% growth will grow into 20, 25. Even though that 20 to 25, I don't want to expect that, but man, I can kind of see it happening. So I have a conservative 14% for TSM, as they're their leading manufacturer and is domiciled in Taiwan, but they're building out their manufacturing in the USA. So guess what? Every US company is going to use TSM because they don't want to go to China. They don't want to go anywhere else because we see the trade war happening. We see how Donald Trump is stern on China. Companies are not going to use other players to get their chips. They're going to stay like homegrown, more like Samsung and Intel, players who they can kind of trust. And Intel and Samsung can't even compete with TSM. TSM is way ahead of them. TSM actually build reliable customer relationships with Google, with the Amazons, with Meta. Intel and Samsung, they cannot rely on. So that building of customer relationships, they are more advanced on chips. They're releasing their new chip in the next like couple quarters. You can kind of see that trend of this market growing. So for TSM to sell at a market average around 20, realistically the market average is around 15, but 20 in this type of market, I felt like it's pretty cheap. And this was like 1918 when I was buying. So 1918 multiple for a growing company at like 14% in the next 5 years, paying like a 1% dividend. And I feel like if it stays at this multiple, it's still very attractive for the free cash flow growth you're going to get as AI demand is surging. We see companies not slowing down. Meta is announcing that they're increasing their AI spend. We have Google increasing AI spend. We have Amazon increasing AI spend. They are not taking any prisoners. They see this industry taking over, and AI is going to take over pretty much. And you have to go to TSM in order to do this. The main manufacturer for all these chips, and they can do the packaging as well. And they do the packaging for specific companies, and that's why it's so important that these company relationships with TSM make sense for the long-term growth of the market and the long-term growth for TSM. Here's a breakdown of the Q1 2025 revenue. High-power computing was 59%, smartphone was 28%. In this high-power computing sector, guys, like you have to understand what's going on right now. This sector is going to grow around like 15 to 20% in the next 5 years. And that's what I'm having. And that's what I'm having for this company. I'm seeing the trend kind of go that way. So if you can kind of see the trend go that way, it's selling at like a 20 PE, which I think is a very fair price. How can you go wrong with that setup? 7% this quarter, 22% down for the smartphones. And this is like the maximum upside. Like, what happens when this recovers while the whole AI and data servers continues to grow? So if we can kind of see recovery in the smartphone section, plus we already have the AI growing so fast, TMC is going to take all of that revenue, man. Like they're going to take everything. We already know automotive is growing like crazy when we have Tesla, when you have BYD, we have all of these companies we have Waymo. So we have like a huge trend going in this way, while the company is basically an oligopoly or basically a monopoly. So we have that kind of monopoly over there, and they built really strong customer relationships with all of these companies. A lot of people are underrating that customer kind of satisfaction and going to that company and actually doing deals with that company. They've built strong relationships, so people are not going to go to Intel or Samsung to kind of do what TSM is doing because they already have such a strong market hold and they are really, really reliable. So the Q2 2025 guidance, between 57% and 59% gross profit. 47 to 49% operating profit margin. This is how you can see it's such a strong company and it has a strong moat. You're not able to produce these results without a strong moat because another company would take it over and kind of screw your operating margins, but you can see they're staying steady. And this might get a little bit worse because they're doing a lot of investments. And what I really like and what I really saw that kind of inspired me to kind of go more into TSM, they're able to raise their prices, and the CEO said they're going to raise their prices more effectively. They see Nvidia making all this money. They see all these companies that need TSM's manufacturing. They need their chip development. Like, they're making so much money, but TSM's kind of making money, but not as much as Nvidia. They're going headfirst and producing more revenue. And bottom line, look how they're raising their prices. And I love this, man. They're raising their prices consistently now. They're not playing around. So you're going to kind of see TSM doing this a lot more. TSM is able to do this with a return on invested capital of around 38%. With all that money they're investing, they're seeing a strong return on that money, 38%. Man, that's incredible. Like, if you see a company doing that, like, it's insane. Like, you don't realize how powerful that moat is or how strong the company is. We're going to see TSM take off. They generated $9 billion of free cash flow this quarter. So I'm kind of extrapolating that out. I'm getting around like a 5% yield from where I bought it. I was getting around like a 5% free cash flow yield. And I'm expecting that to grow around 13 to 14%. And I think that's conservative because we're seeing this trend just take off with AI, with data centers. Every company needs more compute. So I can probably see this higher, but I'm not going to go that far. I'm going to go with the 13% on top of the 5% cash flow yield. So I'm already getting an 18% yield on my money plus a 1% dividend, 19%. So right now I'm getting a 19% yield on my money. I'm happy with that return. There is a lot of risk because we have the whole Taiwan situation and people keep coming back to that. And I think that's why it's kind of trading more undervalued right now, because the whole China-Taiwan situation, we have a lot of China development and a lot of companies in China are just taking off. They're kind of innovating like crazy. So maybe there's a threat over there. And then we have tariffs. How's tariffs going to affect TSM? I don't think it's going to hit as hard because Trump knows how important TSM is to the USA and to a lot of companies. So I don't think it's going to affect the company too much, in my opinion. So right now I see TSM as a buy. I'm buying it. I'm holding steady on my position already. Guys, what do you think about TSM? Do you hold it? Are you buying it? Do you don't like the company because of where it's at? Guys, tell me down below. Like and subscribe.